Daily Candle Review for the day ending March 2, 2026. Today's candle score, 30 out of 100. Deep bearish territory. Here are the key score drivers. Price action scored 8 out of 25. Bitcoin closed near $66,196, down 1.8%, with seller congestion at 67,000 and all major moving averages trending lower. On-chain scored 8 out of 20. The whale-to-exchange ratio is climbing while $5 billion in retail capital exited Binance over the past month, cautious accumulation by large holders amid broad retail capitulation. Derivatives scored 4 out of 20. Futures open interest fell to $43 billion, the lowest since November 2024, and a $1.8 billion derivatives sell wave hit within an hour of the Iran escalation. ETF flows scored 3 out of 15. Spot Bitcoin ETFs have now bled $6.4 billion over 4 consecutive months of outflows, the longest losing streak since their January 2024 launch. Macro scored 2 out of 10. The US-Iran war entered its third day with strikes expanding across the region, gold surged to $5,400, and oil disruption fears are compounding an already hostile macro backdrop. Dominance scored 5 out of 10. Bitcoin dominance held at 58%. Capital is huddling in BTC as a relative safe haven, but that's cold comfort in a declining market. Sentiment scored 0 out of 10. The Fear and Greed Index collapsed to 10, extreme fear, a reading seen only twice before in Bitcoin's history. What happened today? Bitcoin closed at approximately $66,196 after a subdued session shaped almost entirely by the escalating US-Iran conflict. The weekend strikes, which killed Iran's supreme leader and have now drawn in multiple Gulf states, kept risk assets on the back foot throughout Monday. BTC held the $66,000 floor but couldn't push above $67,000. Derivatives told the real story. Open interest dropped another billion to $43 billion, the lowest in over a year. ETF outflows persisted for the fourth straight month, with cumulative redemptions exceeding $9 billion. On the positive side, whale accumulation signals are emerging on-chain, and the extreme fear reading of 10 historically precedes relief bounces, though the geopolitical backdrop makes timing one exceptionally dangerous. Outlook. The near-term picture is dominated by the war. If the conflict escalates further, expect another leg down toward the $63,000 support tested on Saturday. The historically extreme fear and greed reading of 10 suggests the market is approaching a washout, but washouts in wartime can go deeper than anyone expects. Tomorrow's forecast. Trend momentum is bearish. Derivatives setup is bearish. On-chain flow is neutral, with whale accumulation offsetting retail exodus. Key catalysts ahead include ISM services data tomorrow and non-farm payrolls on Friday. ETF flow trend remains bearish. Projected next day score, 28. Deep bearish territory. The conflict shows no signs of de-escalation. Unless there's an unexpected ceasefire signal, expect continued pressure on risk assets. Key levels to watch: $63,030 support, and $67,079 resistance. We'll check back tomorrow.